Hello everyone, this is Juan Sarmiento. Hello everyone, this is Juan Sarmiento, and today is Friday, May the 12th. Let's go through our positions here, what needs to be closed, what needs to be rollover, etc. Let's start with Adobe, and I can see that it's 1 week to expiration, and this trade has not been successful, so it's time to close it. You can see the current position with adjustments, and this is what I will get out of it now. And as you can see, my expense is bigger than my potential reward. So I'd say once you approach 1 week to expiration, you need to close the position, whether it's a winner or loser. If it is a winner and you want to roll it over, that's an option. But in this case, no, let's call it quits and don't extend your losses. Okay, let's set that off. Let's go to AXP. And this is the one that I had the cover call on, as you can see. And well, if you remove the cover call, which is 150 call, this is what it would look like. It's quite bearish. Let's look at the chart. Do I believe it is going to go down? It's been going down quite a bit. It's probably time to take that. Let's see. We have June, 4 calls, 1 put at 180 put, and 155 put. I don't need this 180 put, do I? And the stock has gone down enough, so I can roll this down or simply close it. If I were to close it, I end up with 54. Yeah, I think I'm gonna close this portion, confirm and send. Great, closing. Yeah, let's send that off. I get $31.65. That's not too bad. And then suppose that goes away, and we have 180 call. That's probably very close to nothing in value. We have 2 puts at 155 and 1 short put. Okay, so we could close that, I think, and leave the cover call. So let's close this put and long and put, long and short puts. I'm gonna close. Let's call it a calendar, but you need to adjust. Okay, that was the 180 put, and now we're going to close this portion. I'm gonna say 2 puts right there, custom, and we're gonna buy 1, and then it creates this flat, confirm and send, and then the cover call we can leave there. I think is pretty much at the bottom of the range here. And that's essentially the principle of the cover call. Please be sure to check my cover call strategy. I'm leaving it here as a reminder that you can combine the cover call with the Gini trade for more effectiveness. Okay, so I'm still waiting for that let's adjust it. Okay, let's adjust the credit. Open the lock, and we'll come back to it a little later. And so if that gets filled, we will close this too. We end up with this 180 call. There's probably not much there, and my cover call. Let's see if I can close this call. You get 4 cents out of it. Let's leave it as a lottery ticket. Let's say if this stock wants to go higher above 180, wow. Okay, so the cover call is here. Okay, good. Let's leave that, and we'll see how to operate and the cover call. And the June 9 is due to expire quite a bit from now, so yeah, let's leave that. Let's move on to BP. This was assigned, and we don't need to have this long stock here at all. We have the put to close it with. We could leave one if you want it, because it's gone far enough down. You can leave the 100 calls or 200. I mean 200 shares. I'm not going to close it. Okay. If you want to learn more about the covered call, you can follow my other trades. Okay. Now you have only long calls. That's 14 calls. 6 short, 6 long puts. Okay, now we are going to close this. Or you can simply sell straddles with an expiration of some 28 days from now. Yes. What do we want to sell? Same strike price. Okay, so let's put them to June 9th, or simply close the trade altogether. Let's close the trade. I don't think there's much point in prolonging. This is not a winner by any means. Year to date we have lost $531, so I'm going to close this. Sell it as a straddle. And then the 8 calls that are left, you're going to get 14 cents out of it. That's it. We're out of that one. Let's move on to FedEx. Okay, FedEx. Expiring May the 19th, and that is next week. You have to decide you want to roll over or close. I think I want to close again. I mean a closing move, I guess, because this is 1 week to expiration, and as you can see, slight loser. I'd rather get out of that when I can, and it's a $385 loser, so it's not making us money. Let's get out of it. And there's nothing there. Okay, let's move on to ISRG. And this is a winner. Okay, and the May 26th is the expiration. And that's more than a week from now, 14 days to be precise. Let's leave that alone. Oracle. I think this is a winner. It looks good. June 9th is the expiration. Let's leave it alone. PA and W is a winner as well, slight winner. May 19th is the expiration, and as you can see, 7 days from now, so we can roll it over. If it is well above, we can leave the puts and only do the calls, meaning roll over the calls, and then towards expiration we can sell the puts only. Analyze rolling, and we're going to see 1/16 June. Yeah, and we get $482 times 2 for this rollover. And then we could make this adjustment. Let's just wait until it gets filled. In the meantime, let's go to STX. May 12 is expiring today. Well, the puts are expiring, the calls are expiring, worthless, and the puts, yeah. Let's see how we're doing with this one. STX. Year to date, yeah, this is slight winner, so we can adjust it a little bit if we wanted to. Right now the delta is negative. Let's see where it's gonna go. This stock may bounce from here. We have 5 puts at once at 700, 5 put short, 5 put long, and 1 short at 55. Yeah, that looks fine. Okay, we can roll this. And let's go to June 9th. Okay, the call is almost worthless. So let's do the put side only first. Analyze rolling. June 9. That only gives me 5 cents. I'm thinking here that it's probably best to get out of this trade for now. And so how do we do this? Do the put side and then the call side. Depending on which one gives you more money, you try to get out of that first. Okay, so scroll it up until 70, and here are my calls at 3 cents. So that's going to expire worthless. Is the put side that is quite expensive. So I'm going to say buy it and press the control key and click 4 more times. Okay, that's going to close my May 70 put. Okay, now I'm going to scroll down, and here it says June 16, it says position. So you scroll down until you see that. So you have the 55 put. We can sell that. And so I'm going to press Control and click on the bid, and that sells it. Okay, just the one. And then clicks 5 times here. Or, tell you what, let's sell this in isolated. So let's do this one which matches. Okay, so let's control key and let's do the, since we're selling, bid. And this will close the puts. And we have still the 55 put, but let's do that separately because it's so little there. And doing it separately like that, it will get done better, okay? And then this call is going to disappear today, so we can sell it. Say analyze closing, calendar, custom, we're selling 10 and buying 3. And we get 60 cents for that. Okay, I think let's see what else is trading. The Adobe still need to adjust that. Okay, let's adjust that. And just unlock it first. There's waiting trigger, it says. And so I'm asking, the credit I want is below the market price. That should fill. In theory, in the real life, it will certainly do fill. Okay, while we wait for that, let's try a new trade on Google. And here is my trade. So I'm going to copy it here. Order entry, click here, and that paste it, and then analyze trade, and here it is. We can delete this one. Risk. Here's the risk trade, and I have already made the accounting here, but let's go through that again. on my Google. I have the expected value on the earnings was $1.05 or 06 cents. It actually had $1.17 a share. It was a total of 10%. So that's a trade because it beat expectation by a wide margin. Then the volatility, I have it here, is completely different. I assume that this is more realistic. This is a paper trading account, might be a little different. Okay, so it says do not trade, but if I were to say 34, 28, 31, 26, it's probably also 3% or more difference. Okay, let's put it here. 34, 86, 28, 35, 34, 86, and then 30.42, and 26.57. Yeah, it's more than 3%, barely so. So I tolerate that. It's not my favorite, but it would have to do. Liquidity, you can see the difference between mid and natural tells you how easy it is to get in and get out of the trade, and that gives me 0.9%. I tolerate up to 3%. The current IV percentile, which is this chart here, the IV percentile is at the low end, so that's a good spot. The volatility is low right now for the stock, so yeah, you can trade it with confidence. So let's go to the trade tab, create duplicate order, and confirm and send. And we want how many lots? Well, we want to up to 10,000, well, to be precise, $9,364. So let's say multiple, and we add here until we get, yeah, it needs to be $8,768. Send that off. It's now allowing me because there was an adjustment that we did with those shares. We had a shares of stock that we have covered, so it's not going to allow it. It would have to be the next day. So we're going to have to pass on that. But that if you want to consider that as a trade, it might be a good trade. All right. Let me go through this again, Adobe, and yeah, you can make this adjustment by reducing the credit somewhere here in the middle. Let me see. You can check what you did, message here, and it says I asked 61.47 and got filled at 61.73. So it's a little better than that order intended. And now here, do the same thing, lower it. You just want to get it out of the system. Okay, so I'm going to try that until it gets filled. And that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.